gold and silver are handily outperforming. And that's telling us that what the central banks that have been accumulating more gold than they ever have since they began tracking, because they know what they're doing to destroy the currencies. And I saw this yesterday morning on Bloomberg now, where they were touting the devaluation trade. So that means that destroying the value of the currency, the purchasing power value of the currency, is now a good thing. It isn't a good thing. But the fact that they're touting that blows my mind, because they don't really want the public to understand that this inflation and this devaluation, it's really not necessary. But that's how far the markets have been degraded, and the currency markets have been degraded. And so this surge in both the spot prices on gold and silver is a huge indication of that. Well, if I'm right, and what time is going to tell, I'm either going to be right or wrong, but if I'm right, and if this is indeed the melt up part of this phase, then I will expect everything to continue to climb, because this is the end game for the fiat currencies. And the only tool that they have is, they want more debasement. And really is an indication when they're talking about that as a good thing, a debasement trade. Are you kidding me? Oh my God. I mean, people don't realize how significant that is. But, the U.S. is now in a government shutdown. And there is even discussion as to whether or not the furloughed employees would be getting their back pay, and yet the stock markets are surging higher. Well, it certainly makes sense with all that uncertainty for the spot gold and silver markets to surge higher. But again, not the stock markets. That, of course, is because we are at the end of this currency's life cycle. And now the markets are believing it. I can't even stress how important Wall Street touting the devaluation trade is, as so blatant, so incredibly blatant. It's kind of mind-blowing.
Even as the U.S. government threatened shutdowns and furloughs, equity markets continued ascending. In times of uncertainty, safe haven metals often shine, and indeed gold and silver have surged. Yet stocks too rally, showing we may be in a strange twilight. The market is bidding up everything, expecting the central banks and treasuries to print their way out of the crisis. Mainstream finance now tacitly celebrates currency devaluation. That's extraordinary, a system admitting its own erosion and yet leaning further into it.
I would say we're very close. And the other part of that, which is a huge part of that, so a part of the timing is going to be dependent upon the execution. But recently, President Trump signed the Genius Act, which legalized the stablecoins. And so what nobody seems to really understand, but I'm old enough to have lived through it. And again, I could be wrong, but I'd bet anything on this, quite honestly. When he signed that, he changed the global monetary system. Because remember, in the 70s and the 60s and the 70s, when the U.S. was losing the status as the world reserve currency, well, they had to create a new artificial market for dollars. And so Henry Kissinger went to Saudi Arabia and created the petrodollar, and that created that artificial market. But frankly, since 2013, actually since 2008, it was generally the banks and the governments that were big buyers of treasuries. So first, during the financial crisis, which is, in my opinion, when the system actually died and then was put on life support, you have been losing the traditional buyers of treasuries. And 2013 was when the two biggest global buyers, China and Japan, of treasuries started reducing their buying and their holdings of treasuries.
A pivotal development came with the signing of the Genius Act in the U.S., a law that mandates stablecoin issuers back their tokens one-to-one with U.S. dollars or treasuries and brings them under Bank Secrecy Act oversight. This effectively institutionalizes a new artificial demand for U.S. debt. If corporations like Amazon issue stablecoins, they must acquire treasuries to back them. It's a structural shift. And because other jurisdictions may adopt similar frameworks, the global monetary system may fragment into multiple corporate-backed digital currencies.
And we're at a point now where we needed to create a new artificial market for dollars. And so with President Trump signing the Genius Act and requiring it's corporations that actually create stable coins. And if they're dollar backed, then that's on a one-to-one basis. So you have, say, an entity like Amazon that will have their own stable coins and create their own infrastructure for that. You and me would take dollars, buy their stable coins, but as soon as they create those stable coins, they have to go buy treasuries on a one-to-one basis to back it. So that is a new artificial market, and it ain't over yet because there is nowhere where it's said that the U.S. is the only entity that can create stable coins. So you have Hong Kong doing it with Hong Kong dollars. You can have it's going to be very, very fragmented market because any corporation can issue stable coins. You know, there are very minimum requirements to be met. But I know in the times we've had so many interviews, and I know that we've talked about, well, what's going to justify the creation of this new money? And you might recall, said in all of the reading that I've done, it was either debt, so they have to get rid of the mountain of debt that's not payable in order to do that, or purchases. Those were the two things that kept coming up.
Historically, the dollar maintained dominance through mechanisms like the petrodollar system and aggressive treasury demand from global buyers. But after 2008, and especially since 2013, major buyers such as China and Japan have been shrinking their holdings. The U.S. needed a fresh artificial engine to maintain dollar demand. Enter stablecoins. Yet this creates fragility. If the dollar fails, every dollar-pegged digital structure becomes vulnerable. Some nations will issue their own stablecoins. Corporations and AI may become the architects and manipulators of monetary flows.
Well, guess what? With the signing of the stablecoin bill, my long-term question has now been answered, and it is a combination of purchases and debt. And I believe that that can push us into the hyperinflation that we need to finish off the current system and usher in the new system. And that is going back to why you see, number one, global central banks buying more gold than they ever have since they started tracking it historically, and also why you see the surge in the spot prices, because smart money is getting into gold and silver. But, gold is the primary currency metal. Silver is the secondary currency metal. And the current monetary system, it is falling apart when you see Wall Street touting the devaluation trade. Devaluation means that they're going to do this until the currency you can't buy anything with it, just like my $10 trillion Zimbabwe note. I can't buy anything with it. It's got lots of zeros on it, though.
Smart capital is flooding into precious metals. Central banks are buying gold at unprecedented rates. In 2025, they are on track to purchase over 1,000 metric tons again. Survey data shows 95% of central banks expect their gold reserves to rise. Gold has overtaken behavioral norms, now widely viewed as a currency rather than just a commodity. Silver is also breaking key technical thresholds, and a renewed cup, formation or completion of a multi-decade pattern, could portend a massive breakout. The metals are not just speculation, they are hedges against systemic failure.
loss of confidence in the system and in the money system on a global basis. And so, yeah, you are seeing the spot prices surge. What's really interesting, particularly with silver, is if you go all the way back to the 80s, we are now concluding a major double cup formation, which frankly, I don't think I've ever seen before. It's crazy. You can look on the chart and see it's just this huge double cup from, I think, 81 or something like that until 2011 or 13, something like that. And now the next cup concluding. This is major. Once you see spot silver go above that $50, which it could be happening while we're talking right now, it's that close. But once you see that breakout, then technically I would expect a bigger surge in the spot silver price.
You're right. It could be happening as we speak. We'll try to be fast on posting this interview so that it isn't outdated too quickly. So maybe a little bit more on what's going on with the prices, because we are at these unprecedented levels. I know if we look long term, you have pretty high expectations for where gold and silver prices could go. But if we're looking, say we're looking at till the end of 2025, what do you see coming?
Well, quite honestly, Charlotte, I believe that we are in the melt-up phase of these markets, where no matter what happens, you're just seeing surges. And you're seeing that in the stock markets as well as the crypto markets. And the interesting thing, though, right now, if you go back to the beginning of the year, what you actually see is that while everything is going up, the spot contracts on gold and silver, and particularly silver, are much stronger and more powerful than those prices that we're seeing in the stock market or even in the Bitcoin market, in the crypto markets.
In the final act, what's emerging is a shift from currencies that can't keep value to new structures built on debt and growth illusions. Hyperinflation becomes not a theoretical risk, but an escape valve to blow up unpayable debt and usher in new monetary regimes. Central banks, corporations, and everyday investors will be drawn into that transition. The stakes are existential. Either we watch currencies collapse or we adapt to a redefined money order. The best defense now is physical assets, gold, silver, in your possession. We're not spectators. We're living the end of one system and the birth of another.
Gold and silver are handily outperforming. And that's telling us that what the central banks that have been accumulating more gold than they ever have since they began tracking, because they know what they're doing to destroy the currencies. And I saw this yesterday morning on Bloomberg now, where they were touting the devaluation trade. So that means that destroying the value of the currency, the purchasing power value of the currency, is now a good thing. It isn't a good thing. But the fact that they're touting that blows my mind, because they don't really want the public to understand that this inflation and this devaluation, it's really not necessary. But that's how far the markets have been degraded, and the currency markets have been degraded. And so this surge in both the spot prices on gold and silver is a huge indication of that. I would say that it's a backdoor way to get involved in the CBDCs, but it will be corporations and AI that will be manipulating what you do. And again, what justifies this money creation? They're named stablecoins, but they're backed by dollars. Well, in this country, and actually in a lot in South Africa and a lot around the world, most of the stablecoins that are issued are dollar stablecoins, but that means that they go the way of the dollar, right? And it's relative wherever you are in the world. So the dollar isn't stronger. The dollar is losing purchasing power. It's just losing it a little bit more slowly than other currencies, but they're all losing all of their value. It's the end. I don't like to say that, but you can't bury your head in the sand because ignorance doesn't make you immune. It just leaves you vulnerable. And good that your viewers are loading up on, it's got to be physical. It's got to be physical.